Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a range, and given the failed breakdown from yesterday, we are going to favor the buy side, especially if the market's holding above the 60.75 to 62.75 pre-market support, because holding above that area signals continued strength on the upside. And from there, if we can break out above 67.75, then we can, of course, quite easily tag the open gap at 70.5, and then the next area of resistance would be at the 75 to 77 all-time high. And if there's sufficient momentum and broad market strength, then the market could even push to a new all-time high. So yesterday's failed breakdown marks a failure below a multi-day balance, and that typically results in a move to the other side of the balance, which in this case would be 75 to 77. So that is the higher odds or higher probability scenario that we're going to work with. But at the same time, we have to keep in mind that the market is still technically trading within a range and trading within a balance area. And our short-term bias is going to be neutral bullish. So the neutral part means that we do still have to watch the market in real time, and we can't really be stuck on one side or locked into a single view. So the preference is going to be on the long side. But if we're seeing clear signs of weakness, like we did yesterday, and we're seeing broad market weakness via a weak advanced decline line, or if we're seeing downside momentum via the NYSE tick holding below zero and printing extreme negative values, then we do have to take that into account. This is not a market where we're just going to blindly by the support zones. But as long as we're not seeing any signs of weakness and there's no wide range breakdown bar below the pre-market support, we're going to give preference to long setups because of yesterday's failed breakdown. So on the downside, a break below pre-market support would be a early warning sign, and it would signal at least short-term weakness and bring the 53.5 to 56 initial support into play. That is really going to be the key area. That's the area that marks the intraday breakout from yesterday. So if buyers can't hold ES above initial support, then the whole pattern turns to be more bearish, and from there we can go down to yesterday's low at 48.5 and down into 42.5 to 45, and potentially even 39.5 and 36 to 38. That's not the high probability scenario, but we just don't want to get blindsided. So we always want to be prepared for both the high probability scenario as well as the low odds scenario. So again, we are going to give preference to the upside, and the high odds scenario is a continuation move and a test of 75 to 77 with potential to make a new all-time high. Now, beyond 75 to 77, we have to be careful because we're heading into the weekend, and it's a long weekend. The markets are closed on Monday, and given that the markets overall are still trading within a range over here, there may not be that appetite to carry risk into the weekend. So that could potentially limit the upside beyond 75 to 77. But the way the market is setting up right now, as long as we're not seeing any signs of weakness off the open, we are going to favor the buy side. We're going to be careful on shorting any upside move because it could be a short-term directional move that goes and tests 75 to 77. And like I said, potentially even a new high could be set today. So those are the main ideas heading into the open. Let's see if the buy side can maintain the control that we saw from yesterday afternoon, and we'll take it from there.